Let's talk to all things digital, and we're turning to the advisory. Now, to talk about a new era of payments and assets in which the US is ushering in a new era of payments and assets with stablecoins and tokenised markets set to reshape the financial system. Rob Gilmour from Wealth Simplicity joins me now. So Rob, tell us about this Genius Act. What is it?
Yeah, hi Sue. Well, it's sort of moving on from gold into sort of the crypto space. The Genius Act was passed just back in July in the United States, and effectively it's digitising the US dollar. And it's sort of come through, it's been talked about for quite some time, but it is now a reality, and it is really the first step in some very significant changes in the financial system, which essentially creates an asset-backed cryptocurrency. So cryptocurrency, typically very speculative because it is what someone wants to pay for it on the day. But essentially what this is it's crypto backed by the US dollar, and that has huge implications for the payment system around the world.
So can you explain to us what stablecoins are?
Well, stablecoins are like crypto. They are based on blockchain, and essentially the way that the US has legislated this is that their digital currency needs to be backed by assets. That's cash or US Treasuries. And effectively what that is going to do is enable banks or other financial institutions to issue stablecoins backed by the currency or the US Treasuries. And so that is going to create a huge demand as the dollar is digitised for those 90-day Treasury bills to back these currencies in order for banks to then facilitate payments around the global financial system in stablecoin.
And Australia also is developing a stablecoin?
Yes, they are, and there's a number of countries that are following suit. Hong Kong, Singapore, the EU. Australia has draft legislation in place to, and is working on legislation, I should say, to regulate how stablecoins will operate, as well as having a pilot stablecoin in place already.
And this also, you say, is creating a new source of demand for government debt.
It is, and the clever part about this, or interesting part, is because the stablecoins need to be backed by treasuries, it's going to create demand for treasuries, and the implication of that with increased demand of treasuries is going to increase the price but lower the interest rates. So effectively what this will do is lower the short-term yield curve in the US, much like what the Federal Reserve was doing post-GFC with quantitative easing, buying treasuries to artificially lower the interest rate. So the offset of this should be lower, shorter term interest rates in the US, stimulating demand for assets like we've seen in the stock market and the like.
Okay, we'll link to stablecoins are tokenised assets. So what are tokenised assets?
Yeah, so look, if you've got stablecoins being sort of the rails, tokenised assets are like the cargo that goes along the rails. And essentially it is digitising assets, and it could be any type of asset that's digitised. It could be loans, it could be infrastructure, it could be property. So what that effectively does is it enables these assets to be traded extremely efficiently through the digital network. Very much like what internet shopping is done to shopping. It's transactions, and really opening it up to a very wide spectrum of people who want to invest.
And now there's currently legislation around tokenised assets before the US Congress.
Yeah, there's so much complexity in this, and where this can go, the mind can really boggle. But there are two very key pieces of legislation that have passed the House and in front of the Senate in the US that are around creating the regulatory framework around how assets can be tokenized. So it's important to have the rules and regulations to give confidence in the system, but those pieces of legislation are, looking to go before the Senate. It's bipartisan. So these changes to the US financial system are real. We've got stable coins, we've got tokenization of assets, and really we're seeing this digitization of the financial system, and that's going to have various implications for many years to come.
So is this the future of finance, given that cash is still, well, the use of cash we know is declining, but still people like to use cash, and we've got the existing payment system. So is it going to take a long time for tokenized assets and stable coins to be widely used?
Oh, look, it will take time to adopt, and it's not about a completely new system. It's really sort of remolding the existing system. So SWIFT, for example, is a payment system, and that will most likely lose relevance unless it changes. Banks will still be intermediaries as issuers of stablecoins and have a role in custody. But you could see things like fractional ownership of real estate. So, if you're getting towards retirement and you want to start to fund your retirement early, you might be able to sell 25% of your house because it's tokenized, and you could start that process a little bit earlier. Or if you wanted to get onto the property market a little bit earlier, you could buy a fractional ownership of a house. It really opens up a lot of possibilities. It could be infrastructure, it could be various assets that are used in businesses around their having a digital footprint and can be traded and settled very easily, much like what online stockbroking did to the ASX and stockbroking industry.
And what about digital currencies like Bitcoin? There's a whole load of other ones. Are they going to be absorbed into the system? Will Bitcoin survive?
Oh, it's a completely different system. So what the legislation on stablecoins and this is doing, it is creating a regulatory framework around this technology within the system. So Bitcoin is out of the system, and as I said earlier, it's really what someone wants to pay for it on the day. It's it will, if anything, it does legitimize it and make it become more mainstream, but it doesn't bring Bitcoin into the system.